Hey everyone, Ben here and welcome to Motivation to Invest. Why do I have $86,000 or £62,000 in these two stocks? Well, in this video, you're going to find out my reasons why, which stocks these are, and my long-term investing thesis. But before we dive right in, if you're new around here, feel free to join the investing family by hitting that subscribe button and turning that notification bell on. If you do find any value in videos like these, feel free to give it a big thumbs up. That helps out tremendously with the channel. And if you do want to know in real time exactly which stocks I'm buying, selling, and access my entire portfolio, and join a thriving community of some of the finest people on the internet, then feel free to check out that first link in the description below for the VIP membership group. With that being said, let's dive in. So firstly, why have I made this video? Well, the goal of this video really is to be fully transparent with you guys and to show you guys my two largest positions, because there's a real difference in investing between making a $10 decision, a $20 decision, and making a $100,000 decision. Now, there's nothing wrong with either of these decisions, but they're different decisions to make. For example, when you've done enough research, you have a good investing strategy, you have strong foundations, and you know what you own, which is the key, then you can load up the truck on great investing opportunities. And to me, that's how the greatest investors actually become immensely successful. And that's how I have personally built up my wealth over a period of time. And the goal of this video is really not to impress you, but to impress upon you the power of investing and to help you guys and guide you guys on this investing journey, because it is a journey that we're all on. Okay, so now let's dive into my first stock. So the first stock on my list is Alphabet, otherwise known as Google, with the ticker symbol GOOGL, and this stock is on the Nasdaq Stock Exchange. So diving straight into my portfolio here, we can see Alphabet here, Class A. I do have a few of these shares on different accounts, but on one of my accounts here, I have 16 shares here at a price of $1,400 each. The current price of the stock is $2,000 each, and the market value of these is around £25,000. So I believe that's approximately $35,000. You can double check the exchange rate, guys. So currently that position is up around £6,000 or about $8,000. The position previously, before this whole tech stock correction, was actually up by around £10,000 or nearly $15,000. Now, I'm sure many of you guys know about Google already, but I'm actually going to dive a little bit deeper into their business model. So first, we all know they're the #1 leader in search, and if you don't know this, just Google it. Second, they have the world's second largest social media platform with YouTube, where you're watching me right now. Now, to me, YouTube is the new television, so that really is a competitive advantage for this company. So a real competitive advantage for Google is their network effect. So the bigger the network, the more difficult it is to compete with. Even if you have another website very similar to YouTube, such as Vimeo, it still cannot compete with YouTube. And then Google also has the world's most popular mobile operating system, and that is Android, which is on almost every other phone, which isn't an iPhone.
Get out. What? Get your shit and get out.
And then let's not forget about everything else in the Google ecosystem. So we have Google Cloud, which I believe is the third largest provider of cloud services after Amazon Web Services and Microsoft Azure. Then we have Google Maps, Google Pay, Google Mail. I'm sure many of you guys use all of Google's services in your day-to-day life, or at least one of their services. But I know what you might be thinking, Ben, Google's this big giant tech company. Doesn't the law of large numbers matter when these large companies cannot continue to grow as fast as they did when they were small? And I completely agree. That is a major risk with Google at the moment. However, Google does have a few tricks up its sleeve. So they're also working on autonomous vehicles with their Waymo technology. So that could be a potential tailwind for growth for Google in the future, because I will dive into a few risks with Google, because there are a few risks with this giant tech company. So the first risk is Google makes the majority of its revenue from advertising. Really, this company is a giant advertising company, an online advertising company. So Facebook and Google basically make up around, I believe, 80% of all online advertising. Now, although online advertising is a great business, when that industry gets hit, the whole of Google's revenues also get hit. And we saw this during the 2020 global lockdown, when many businesses actually pull back spending on Google ads. So Google is this giant cash machine which is embedded in everyone's lives and making just so much money constantly, and we all use it in our day-to-day lives. But this giant company means it's a giant target for government regulation and even possible antitrust breakups in the future. So that is a risk I've got in the back of my mind with Alphabet stock. So that's a brief overview of Google, their business model, and risks. Now let's dive into some juicy financials. So we're here on Stockopedia. This is a platform I use to analyze stocks. If you guys do want to check it out and see if it fits your investing style, I've actually got an exclusive 25% off discount link, exclusive only for you guys, the viewers of Motivation to Invest. So if you want to check that out, I'll leave it in the link in the description below. So diving in here on Stockopedia, every stock is given a stock rank, and Google straight away has a stock rank of 86 out of 100, momentum 92, value 41, quality 91. If we dive into the revenue growth here, so the revenue growth, despite this being such a large company, I believe over $1.5 trillion company, the sales growth is still 20% over this past year. Now that's incredibly fast. Generally, I see a growth stock, no matter what the size, is one which has grown at least 20% per year. And this is a giant tech company still growing at immense speed. So revenues forecast to increase to $264 billion by 2022, as is net income, as is earnings per share. So a strong, profitable, well-run company with plenty of cash on hand. Analyst consensus, all buy, 25 buy, 14 strong buy, 4 hold, people there from Credit Suisse, Morgan Stanley, and many, many more. Current ratio, balance sheet is an absolute fortress for Google with a current ratio of 3. So yeah, this is just a fantastic company overall, but also what did draw me to Google originally is I do like the valuation of the company. So even at these levels, despite me making around 30 to 40% gains so far on this position, the PE ratio is still only 28.5. So the market average for the S&P 500 is around 25. So this is slightly above average, but it's a much greater company than an average company. And I'm sure you guys can agree with that. And if I just dive into the share price real quick here, I can show you the positions I've been purchasing this stock at. So basically, the time of maximum pessimism is the best time to buy a stock. So when many businesses actually pull back spending on ads, which actually affected Google's quarterly revenue numbers, I saw that as a potential buying opportunity. So I've been in and out of Google many times over the past few years, but my most recent purchase was back in probably June 2020 here. It was $1,400 per share, so it was a nice dip here. And then as you can see, this is the point here. So it went up by 50%. So I made around £10,000 on that position, $15,000 on that position. And now there has been a slight correction, a slight pullback now due to the whole tech stock correction, but it's still major gain. And this is the type of stock, even if it only makes 10%, 20%, 30% a year, I'm still happy with that because I know there's limited downside risk. So that's my first stock. And although none of the stocks in this video are a recommendation to buy or financial advice, Google is definitely one you can put on your list for the future. Okay, now diving into stock number 2. This one is my wild card. This one is my high growth, small cap company, but I've got a hell of a lot in this stock. So this company is called Boohoo, ticker symbol BOO, and this is on the London Stock Exchange. Now, Boohoo is an online fast fashion retailer based in the UK, but they also have global presence. Now, I know what you guys may be thinking, Ben, aren't you a pure play tech investor? What are you doing investing into an online fashion company? And it's not that I really love fashion, although I am partial to the odd new jacket, new coat, or even new shirt. It's the fact that this company has so many great things going for it, and even more so in the future. But it's an immensely volatile stock, and I'm going to get into that in this video. So firstly, the positive. So this company is an online, so e-commerce fast fashion retailer. So as we know, the world is accelerating and has been further accelerated towards online shopping. And this was even enhanced by the whole global lockdown, which happened in 2020. So everything that's happened in 2020 has benefited this company. So people have an obsession with shopping and just buying new things. So if brick and mortar retail stores shut down across the country and across the globe, people had no option but to shop online. And this was a great benefit to this company. So I actually spoke to a few employees. I won't go into names in this video, but I spoke to a few employees of this company, Boohoo, and I spoke to them and I asked them how the business was doing during 2020. And they told me business was booming, especially in their loungewear section. So of course, people are stuck at home a lot. They're going to want some comfy, stylish clothes to sit in their house with. So they were shopping online during this whole pandemic. People weren't panicking. People weren't sitting there saving. People were shopping. And that benefits this company massively. The second positive with this company is as immense influencer marketing. So this company really is a market leader in influencer marketing. So what is influencer marketing? Well, this is basically where you pay a celebrity to wear some of your clothes and actually sponsor them to actually wear. Now, this is really common these days, and a lot of new fashion brands are doing this, but Boohoo has some immense relationships, which I think are definitely worth shouting about. So this is not just reality TV stars. They also have major relationships with many other major celebrities, from Jennifer Lopez to even Floyd Mayweather. Now, diving into my position here with this stock, as you can see here, this is a screenshot from my portfolio. I have nearly 10,000 shares with an average price of £2.58 per share. The current position is just under £37,000, so I'm currently up on that position by just under £11,000 in profit. But in dollars, that's around $50,000. But now, as I mentioned previously, this is not financial advice. This is not a recommendation to go and buy this stock because I have a lot in this stock, because it all comes down to your cost basis and where you get in this stock. And also, I do have a diversified portfolio of investments. So the reason I'm adding quite a big disclaimer with this is Boohoo is an extremely volatile stock. Basically, it seems like almost every week this company is being hit with another scandal. So we had the Leicester scandal, where Boohoo was actually accused of some of their warehouses, which they basically outsource work to, of actually paying people below minimum wage. So this happened in Leicester in the UK. And then there was a short seller report early in 2020 and many other little news headlines which have affected this company. But having delved into each one of them individually during the time, because I don't take it for a given, I don't just buy on the dip blindly, I research whether that has actually affected the fundamentals of the business. And it was clear during each one of those situations, the fundamentals weren't really affected. So I personally saw that as a buying opportunity. And I did full videos on that. I had a full playlist where I was virtually live streaming when I was literally putting in thousands into these stocks. And now, of course, I'm reaping the rewards. So diving into the share price chart here, this will show you what I personally call the Boohoo roller coaster. So this stock is not for the faint-hearted. This stock could be hit with another scandal tomorrow, even as I'm recording this video. During the March 2020 crash, which was the whole global crash, the stock was down to 168 pence per share. And then it ran up by 144%. Now, there was a major crash. This was the short sell report here. And the stock went down by 50%, guys. 50%, guys. Now, I'd been in and out of this stock a few times. So I bought the stock here. Got to about probably here. I wasn't right at the top, but I sold some here. It crashed. I lost a little bit. And then I bought more here at the bottom. The stock increased again, up 80%. So that was a major gain. And then there was another scandal. This was this Leicester scandal, which went down here. But what I found out with the Leicester scandal is basically this is a systemic issue which is affecting the whole fast fashion industry. And it's not specific to Boohoo stock. So really, Boohoo was getting painted as the poster child for this whole issue, which is just a general issue in the industry. And then I bought some more, and now we're up around 40 to 50%. So really, it has been an up and down roller coaster over these past few months with this stock. But really, I don't care what the stock is doing in the short term, because to me, it's a long-term play. And my investing thesis with this company is basically it's a play on the economy reopening, on the nightlife reopening in the UK, on travel reopening across all of Europe. And for those that don't know, UK nightlife is the 5th biggest economy in the UK. And if you don't know this, just ask any British friends, and they're always talking about the pub or in the pub. And it doesn't take a genius to realise that when people are going out more, when people are going out to restaurants, to bars, travelling more, they're going to want to buy more clothes because they're going to want to look fresh when they're going out and about in their day-to-day lives. So if this company has benefited during the lockdown, then I think even post-lockdown, it will benefit even more so, as people have all this excess income. Many people have been given stimulus checks. Many people are on furlough. In the UK, people have all this excess income and they're just dying to spend it. Now, this has been my investing thesis since the start of 2020, and I've not changed it one bit. And it seems everything is sort of falling into place right now, and the dominoes are all falling into place. So we recently saw some major brick and mortar retailers actually get shut down because they've been locked down for so long. So we saw Debenhams, we saw Topshop, which is basically a major competitor to Boohoo. Really, it's for sort of young people, fast fashion clothing. What did Boohoo do? Well, Boohoo has plenty of cash in its balance sheet, so it swooped in and actually bought a few of their businesses. But now let's dive into the juicy financials to show you what first drew me to this company. So let's just dive straight into this revenue growth here. 44% revenue growth this past year, so that's incredibly fast. And this is not just exclusive to 2020. So over the past few years, the company's averaged a revenue growth of 54%, which is incredible. So this company is currently bringing in around 1.7 billion pounds, so that's close to like $2 billion in revenue. Now, a lot of people these days are investing into companies with high price to sales of 50, 40, such as, let's say, Unity Technology, which is a great company, but Unity has revenues of less than $1 billion. This company has twice the revenues of Unity. Yes, it is low margins because it's fast fashion industry, but there's still a lot of money being churned through the doors of Boohoo. Then we have operating profits have been increasing, net profits have been increasing, earnings per share has been increasing. So all the numbers are moving in the right direction. At the moment, even at these levels, so the stock's up since I purchased it around 50%. The price of sales is 2.6, so it's not too bad at the moment. It's a little bit pricey, but the good thing with this stock, there's always another scandal around the corner, so always another opportunity to invest as long as the fundamentals haven't changed. So that's the key there. But hopefully on this channel, this video has helped you to actually gain a bit of clarity in what I'm personally doing, and hopefully not to impress you, but to impress upon you the power of investing. And if you guys want to know in real time exactly which stocks I'm buying, selling, and access my entire portfolio, the stocks and the story of how I grew that portfolio from around $20,000 to over $250,000, then feel free to check out that first link in the description below for the VIP membership group. And with that being said, thank you guys so much for watching. I hope you have an incredible day, and I'll see you in my next video. Invest safe.